Hi guys, George DeSantis here with the look at the market for the week ending March 4th, 2016. As you might detect, I still have a bit of a laryngitis and sinusitis, but it's going away gradually. Let's look at some charts. Let's begin with the monthly chart of the S&P 500. I was unable to get the data for super charts this weekend, so far anyway. Maybe tomorrow I'll get it, but I wanted to do this today, so I'm going to use TC2000 charts. Somewhat similar, quite similar. Same indicators pretty much. So let's begin with the monthly chart of the S&P 500. Uh, in this case, let me give you the setup here. We're using a 9 EMA, an exponential moving average of 9 periods, and a forward weighted moving average of 30. The 9 is the red line, the 30 is the green line. Typically, when you're in an uptrend, the shorter term uh, trend line will be higher above the longer period trend line. So this is what we found here all along in a monthly chart. However, recently the 9 crossed below the 30, and if we were to expand the chart, you can see that it's just below the 30 now. And we recall that we saw similarly on the supercharts chart where we use instantaneous trend line, Kalman filter. Very similar looking chart. The indicators are pretty close. I prefer the instantaneous trend line, but this is a good approximation. In any case, right now we can see that last week I pointed out that we were forming a hammer here for the month of February. Well, we completed that. And for the month of March, which will only be a few trading days, excuse me, we have a bullish bar. If we put these three bars together, we would have the formation of a morning star, or at least I would like to see this bar a little bigger, a larger body to call it a morning star. But basically it is, and it's a bullish formation. Now it doesn't always work because you can see here that this morning star didn't really lead to a change in the direction of the trend. Trend was already coming down, and we went further down. So if we were to crunch this chart up, let's take a look at this now. We can see that since this is a monthly chart, way back here, back in 95, we started a nice uptrend, 9 above 30, right? And we in 2001 we fell through here, 9 crossed below the 30 again, and we made a bottom here in 2003. 9 crossed above 30 again. We had this nice uptrend up into 2008, 2009, came down in 2008, and in 2009 we moved back up again. 9 crossing above 30. It's been there up until now. So the big question is, on this longer term chart, are we about to see a reversal here, or is this the beginning of a real bear market, as many people are insinuating and outright declaring? Well, only time will tell, of course. If we look at the bottom of the chart, not the bottom, but if we look at MACD, we'll see that MACD ticked up a little here, so it shortened up a little here, as we got this bullish bar for the last few days of trading. Williams percent R is interesting. We crossed below the 20% line, but we didn't quite get below the 50% line. I find that 50% line, as I look back at many charts, tends to hold up as a good support level. I'm hoping, of course, hope is not a strategy, but I'm hoping that we can find the same thing here, that this uptick in Williams percent R will once again take us above this line, this 20% line, and that we have a continuation of an uptrend or reversal anyway. I've put on Alex Elder's force index here. It is not as useful on the monthly chart as it is on the lower time frame. So we look at a weekly chart and take a look at that right now. Now on the weekly chart of the S&P 500, we had the double bottom here. We might even consider this somewhat of a double bottom. here and here. However, we have a bit of a divergence. Let me draw a line in here. We have a bit of a divergence of MACD. It's not very much of a divergence, but it does slant up, whereas we had this double bottom here, this double bottom here. Now we have Williams percent R on the weekly chart crossing above the 50% line. We saw last weekend that it was sitting just below the 50% line. I pointed out that I'd like to see it cross above that in order to feel more confident we get further upside to this short-term trend at least. Now on Elder Force, when the market pulled back here, Elder Force spiked down, but that was not the classic way that Alex uses Elder Force. If you're in an uptrend and the Elder Force ticks down, for example here, okay, if you're in an uptrend, the 9 is above the 30, okay, if Williams percent R is above 50, and Elder Force ticks down, spikes down as he calls it, the market continues to rally. And this is what we had here. So it's in an uptrend that you pay attention to the down spikes. You know, these spikes here below the zero line especially. Let's take a look at the daily chart. Now, the daily chart, we saw last weekend that the Kalman filter crossed above the instantaneous trend line. In this case, we have an analogous crossing of the 9 EMA above the 30 weighted moving average. Now, I'm using the 930 system here as taught by eFuture Vision, Rick Monteith, and you can always go to the website efuturevision.com and see what he has to say about the 930 system. It's free. You can get at least the first look at it. Now, with the 930 system, Rick's experience and his research indicates that when the 9 crosses over the 30 for the first time, one of the most reliable buy signals is the first close below the 9 EMA. We don't have that yet. It didn't quite close below the 9 EMA here. So if we are looking to enter the SSO or spiders on this market, we might want to wait until, if you haven't done so yet, we might want to wait until we see a close below the 9. Might take a little while, but it would be a high level of reliability trade, according to Rick Monteith. MACD is now sitting nicely above the zero line. We had a bullish divergence here. Remember, we can plot that in. We can draw the line in right here. We had a bullish divergence because we had a double bottom and MACD traced a higher low. So that was a bullish divergence, and that materialized in this uptrend. So we have a short-term uptrend. We do have a downtrend on the monthly chart. And on the weekly chart, we are seeing some signs of that too. However, excuse me. On this daily chart, this divergence of MACD was materialized in a nice move up. I mentioned that I was buying SSO. I bought SSO a couple of weeks ago, Monday, 2 weeks ago, Monday. Now, Williams percent R is above the 50% line, and in fact, just crossed above the 20% line. So what that tells me is that momentum is pretty strong in terms of this trend, this short-term uptrend. I'm not saying it's a reversal of the longer-term trend. It may very well be that we're going to reach this level here of 2000, approximately 2000, and come back down. And we may even reverse this whole thing here. That we don't know at this time. We're just trying to anticipate what could happen. Now, Elder Force on the daily chart spiked down, and that was a good buying signal. The next day we had a nice move up. Check it out here. Elder Force ticked down. Next day we had a buy, and we went up for a couple of days. So Elder Force can be a very useful indicator as well. Now let's take a look at some other charts that we usually look at. This chart is the stockcharts.com chart that Alex Eller's new high, new low spread is plotted on. We can see that since we dropped all the way down here, and Alex said that when we cross above minus 4,000, we can expect a nice trend. That has happened, at least for the shorter term, for the immediate future. And so it's confirming what he said. And he said this is one of the most powerful leading indicators. Let's look at another chart with the impulse. Now, in this chart from Stock Charts, we find the impulse bars colored either red, green, or blue. And if you're not sure what these mean, go to, you can Google it, in fact, impulse indicator from Alex Elder. And basically, it's okay to buy or to buy the stock when the bar turns green, especially from red to green, okay? And we can hold it as long as we don't have a red bar. If and when this turns red, this bar is colored red, we get the heck out. And especially if it turns red on both the daily and the weekly. This chart is a weekly chart. Let me put the daily chart up, and you'll see that, where's the daily? Oh, I'm sorry. This was a daily chart, and it was a daily chart. Let me put the weekly chart up. I'm sorry about that. Now, on the weekly chart, we can see that the bars turned blue here and then finally green last week. So we are permitted to buy, to hold, etc. We can see that the MACD is just about breaking to the upside above the zero line here. So that would be pretty bullish too, because it would show that the bulls are gaining strength, but it would show that bulls have really taken over, you know. And so that's really what we're looking out for. Any change in the color of the bar from green to red on both the weekly and on the daily chart would be a sign for one of the indications for me to jump ship and get out. Well, one of the things I'd like to point out is that we have been in a downtrend. We made a lower high than this high. We made a lower low. So in order to really have a reversal on this weekly chart, we must break above this trend line. If we plotted a trend line right here, we must break above that in order to consider that we have a new uptrend. So what we're experiencing here, in essence, is a bear market rally. It could be considered a bear market rally, and we can still make some money buying the index and certain individual stocks, which I have bought. But be aware of the fact that we need to break above this trend line here. We need to make a higher high and higher low in order to call it a reversal of the trend on the weekly chart. Well, that's it for now for this weekend. This was a little more lengthy than usual, but have a nice weekend, and I'll go drink some water. I'll see you next weekend.